Well, time to have a look at what's happening from a markets perspective. Lots happening on the Asian front with Chinese markets leading the losses. And again, it's as investors are concerned about the COVID-19 situation on the ground, which is impacting economic activity. And as a result, we're seeing a lower oil price down about 4%. But that's not the only, asset that is down. We're seeing our rand down percent as well at around 15.74. This again, as investors are trying to look for safety given the economic uncertainty, the global growth uncertainty with emerging markets also affected. Locally, we did see a SENS announcement from Sasol declaring a force majeure and also indicating that the Q4 numbers will be impacted. We've seen that share price down just over 5.5%. But to talk to us about some of the themes that are playing out in terms of global and local markets, we are joined by Patrice Rousseau, the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. I mean, given what we're seeing on the Asian side of things, what do you make of our JSE's performance with resources leading us weaker so far? What's happening on that front?
Yes, good afternoon, Nastasia, and to your viewers. We are right there on the JSE, driven by concerns about the lockdown, as mentioned, in China, which is impacting about 60% of GDP. But more importantly, I think increasingly there's a realization that these lockdowns would be more protracted, and now that they are being extended to some of the major tier 1 cities, they are seen to be impacting major industry and demand, which has led to the iron ore price closing down this morning on the Chinese exchanges close to 12%. And as you mentioned already, oil prices also diving, which is really the driver of commodity prices across the board going down and dragging down the resources sector within the JSE.
On SENS this morning, there was an announcement, from the likes of Sasol regarding their force majeure. We also had something out of RB Platts as well as PSG. Given so much coming in on SENS, what caught your attention?
Actually, interestingly enough, I think these updates have been fairly positive. Sasol obviously impacted by the oil price going down, but as you mentioned already, the one line from this quarterly update is that the Sasolburg to Durban rail line has been impacted. They've called force majeure on the export of some of the chemicals, so that's obviously a negative. And there's also been an impact in Europe on their chemical sales, and also in China in terms of the lockdown. So some negatives, but overall operating performance, especially on the mining front and Secunda better. So you must look at the minus 5%, in the light of some of the resources stocks down much more heavily, like 8% or more. And then the other stocks you mentioned, good trading update from Standard Bank, which is guiding to earnings up 28%. PSG also good trading update. The shares down minus 1%, but the stock is up strong. And finally, RB Plus, as you mentioned, talking about a slow ramp up, but production for the year will be up at least for 7.5%. And you can see the share price down less than 1%, outperforming the JSE and the greater resources sector.
So in the early hours of this morning, you had the Wall Street Journal reporting that Twitter is in talks with Elon Musk, according to people who are familiar with the matter. I mean, when you look at this particular story as it broke last week, I mean, is it a good fit? And what does a Twitter under Elon Musk look like for you?
Yeah, I think it's a good question. I don't think there's any business reason for Twitter to be alongside Tesla or SpaceX, or for Elon Musk to be running the business. The only reason is it seems to be that billionaires across the world, and especially in the US, want a vanity media asset, and Elon Musk is probably one of the more followed global business people and wants to have a say in the running of the company. Financially, I don't see how that makes sense, given that he's still in a very heavy investment mode within Tesla, and I think there's better ways for him to deploy his capital, because I can't see what value he's really going to add to a social media asset. I could be wrong.
Yeah. What's your assessment of SA food producers given a South African consumer that is under pressure?
Yes, it's been a very difficult sector. If you look at the cost push pressures, South African CPI last print was over 10%, whereas retail price inflation is just over 5.7%. So basically what that means, the difference between producer inflation or cost push inflation, is that the producers are not able to recover costs from the retailers, or you could argue that the retailers, for instance, the food retailers, have more power in the negotiation and are pushing back on this cost pushing pressure. So it's quite bad news for the food producers, because you're seeing wheat and sunflower oil and all these inputs being impacted by the war between Russia and Ukraine, because Ukraine is really seen as a breadbasket of Europe. So these cost push pressures will squeeze the margins of these food producers, and they won't be able to recover their costs completely. Add to that electricity costs and fuel costs going up. So we've seen that sector under pressure, down 10%. We've seen the leader, if you want to call it, under pressure. So really one way I think we'll have to see some relief in terms of the cost push before the sector recovers. But I think there's specific opportunities. Tiger Brands has underperformed over a number of years now. We're getting to a point where it's looking, from a valuation point of view, quite attractive.
Right. Patrice, always a pleasure having a conversation with you. Thank you so much for your time this afternoon. That is Patrice Rousseau, the Chief Investment Officer at Ashburton Investment, giving us his perspective on the latest markets activity.